or a, you know, just like a coin toss or a gamble, or to say, oh, okay, you know, I'm feeling lucky that this is going to go in this direction. Because when you start doing that, you know, you go back to a 50-50 chance. It's just a coin toss. Oh, I think this is going to go up today. So, you know, you buy it, or you think it's going to go down, so you sell it. So you don't really want to trade from that, or trade from the point of view where you say, oh, this is breaking out, everybody's buying this, let me buy it. Because 9 times out of 10, it's going to come crashing right back down, and then you're going to realize you should have waited, and that would have been your entry. But what happens to a lot of people is, if they buy at the wrong time, like if you buy this top right here, and it comes down here, and you're underwater in your trade, now you're kind of psychologically, you know, dealing with loss in your mind. And so you're like, oh, you know, was this a good trade? Maybe I should have waited to get in. And that will, you know, that's a psychological torture. Like, the way that your mind works is that as soon as you're in a negative trade, your mind starts to mess with you. You start to be like, oh, you know, that, you know, maybe I should have waited, or should I, you know, it just really confuses you, because you're in a state of loss. And then when the price goes back up, you know, you start to feel a little bit better. But again, if you don't understand the wave count, you could be really right again. You know, if you bought here at number 1 and you dealt with the psychological torture here, and now you're like, okay, great, price is going up, I'm in profit. And then the price comes right back down, and now you're at break even, and you didn't make any profit off the market. You're confused. You're like, is this thing going up or what? You know, you don't really understand the flow of the market. And you may even abandon your position here and be like, this thing's not going anywhere, and I'm just going to cut my losses or break even, or, you know, maybe a little bit went lower again than where you bought, and you're like, let me just, you know, cut my losses on this trade. And you're not understanding then the thing's getting ready to make its 5th wave, and that's really where you should have been looking to buy. So I'm sure you've experienced it. You know, I mean, for years I experienced it before I understood the geometry of the market, where you get into a trade and then it's not really going the way that you thought, and then you basically cut your losses on the trade, or you get out of your trade, and then you look back at the chart and the thing exploded, and you're like, whoa, what if I would have just waited, you know, another hour or something? And that's why. That's, you know, because it's moving in a certain fashion, and most of the likely you got in at the wrong time to begin with. So proper placement in the market is so crucial, because it's going to save you from those times of when the market comes back around at a loss. And practicing L8 wave theory, if you try to get in on this number 2 retracement, you're pretty much got the best seat in the house for the whole ride, because we already dealt with the retracement. A lot of people got shook out there, and now when it creates this next wave, you got a pretty good seat. You know, even if this number 4 comes crashing back down to test wave 1, you're still down here. You're still in profit. And if you understand the structure of the market, you can be patient and wait for this move to play out. So really understanding, you know, how the market structure is moving, and where other people are going to lose money by chasing it and buying the breaks, and a lot of stuff like that. You know, there's a lot of people that practice a strategy where they'll say, you know, if they'll look at this and they'll say, as soon as it makes a new high, I'll buy the new high. Now, I don't understand why people play that strategy, because when things make a new high, they retreat and they recess, and that doesn't mean that they're going to continue on and make a new high. Like, I know a lot of people that said, oh, you know, I bought the new high for Ethereum. Basically, like, they had a buy stop, you know, when Ethereum made a new high, to buy the new high. But, you know, now we're recessing from there, and we're consolidating. Sure, the price will probably go back up, but that's not really where you want to get the placement. You don't want to buy things as they're making their new highs. That's just not a good strategy, you know? So we want to recognize this, okay, and how other people are just going to, you know, this is the time we want to be buying. You know, most of you guys that have been on my signal service for a while, you might realize that, you know, I'm noticing these market cycles end and setting us up for, you know, the next week to come, 2 weeks to come, getting our seat and getting our placement for a larger move. And that's because we're basically getting in the down cycle when people don't want it, they're depressed, they don't really understand that it could get another cycle out of it. I mean, you know, when you look at this chart here and you look at, like, let's say Stratus, for instance, okay? You know, I got us into Stratus early on because I understood that Stratus completed a market cycle here. Okay. Understood that Stratus completed a market cycle. All right, complete the whole thing. And down in here is when everybody really didn't want it. Even though, we were looking at first here about this 88, 76, 78% retracement point, sold down a little bit lower and then smacked down a little bit lower again. But then it finally, once it broke free of all this resistance, it's creating another market cycle. So using this strategy, you guys have to realize that we're seeing the future before it happens a little bit, because we're understanding that one market cycle is kind of lead into another, and that that the price of things is going to go through these emotions of denial and panic and anger and depression, and right in here in this depressive state and this down type, this down in the trial here when nobody really wants it, because things are going to oscillate up and down. In this low period here when nobody wants it, if we can identify that it, had good market structure and it seems like it's, setting up for another move, then that's our time to get in. When everybody else is losing on this, anybody who bought too late here, they're saying, oh man, let me just get out of this. Oh, let me get my last couple of dollars out of this. They're angry, they're mad, they're depressed. And here they're in disbelief. They don't even care about this thing anymore. And then, it starts to get a little bit optimistic and some hope in it. And, the first little disbelief rally will happen, kind of like this, and that cycle is going to repeat itself. So we're setting ourselves up way before the herd comes on a lot of these plays, okay? Because we're recognizing that market cycles are breaking and that, everything's going to go through its flow. It's going to go through its downtime. It's going to go through its uptime again. So we're spotting out that uptime is going to be coming, and we want to get in that down cycle when nobody really wants it, when nobody's really interested. And that's setting us up. We got into this one, for instance, 7,000, 8,000 in expectations of this thing, going to make a new high. All right. It takes time to play out, but we're trading with the momentum, but we're also trading market psychology, market cycles. We are identifying one cycle's ending. Nobody wants it. Everybody who bought too late here or is getting, fighting the trend here. By the time it gets down here, they're just like, ugh. Let me get out of this. What other coins are moving? Let me go sell, get out of this and get as much Bitcoin as I can to chase the other coins that are playing. And that's where we wait. We wait for these, for everybody to say, hey, we don't want this anymore. And we get, we position ourselves strategically for the next move. Okay. Based on this repeating pattern over and over again, this pattern is going to repeat itself on every coin, every cycle. So playing with these emotions and understanding how other people are losing in this game really is the key to surviving in this game and becoming one of the 10%. So once we understand that, then we position ourselves when nobody else wants it, and we wait. And that's the time that we exercise patience. That, and when we look at a certain chart, we say, when's the time to get in this? We also want to wait. We want to wait until everybody else, trades the breakout and they get washed out on the retracement, and then we want it again. So buying first identifying the trend is first and foremost. Come on, here we go. Identifying the trend is first and foremost. And then once we can identify the trend, then we understand, hey, this thing is moving up. This thing's moving up. Most of these things are moving up. So let's get them when people don't want them. Let's get them when people are selling out of them and don't want them anymore. Okay. And so that's what the strategy that I like to practice, that I find it works the best. All right, is to get in on those moves when nobody wants them. It seems like I lost my place here on XEM. Okay. Well, let's talk about here. Okay. Now, a biggest thing here too is not only identifying the other emotions of the other traders and how they're losing money and where would be the good time for us to get in. We're identifying the trend, the new market cycles that are beginning. So we want to buy the dips. When other people chase it too far and then they start to get washed out, we want those retracements. Okay. So first, it's identifying how other people are going to be losing money in this emotional cycle and how they're, maybe buying too soon and they're getting washed out when the retracements happen, and we want to get in there. But another biggest part of it is controlling our own emotions, especially when we lose. Okay, we're all going to have losses in this. We're going to misjudge our entries. We're going to get off, our wave count. But, for myself, I've kind of got to the point where I'm probably wrong about 20% of the time at this point. But when I'm wrong, I just always protect myself with a stop loss and move on. Don't get stuck in that emotional torture of being wrong. Because as soon as you get stuck in that emotional torture of being wrong, you start to revenge trade, okay? And you start to some guy even sent me a message. He bought Ethereum too soon, and then he bought it like up in here, and then he got washed out here. He didn't buy here, wound up buying here, and he's losing again. And he sent me a message that he's gonna, rage go long on Bitcoin, at 1100. And I know he got washed out because Bitcoin went down and tested 1,075 again. So when you get into that emotion of loss, you don't want to feed it. You don't want to feed it with that whole revenge trade mentality, because most likely you're going to make another bad decision right away. You're not in the right conscious mind to trade. So if you lost money on a trade, walk away. Like literally, guys, walk away, go do something else, reassess the charts later. Like go do something happy. If you got kids, go spend time with your kids or your woman, or go do something fun and get your mind out of the charts for a minute, because there is going to be loss. This is not 100% win every day, a good day type of a game. We all are going to deal with loss, but to make your losses less than your wins, that's the key. To cut your losses short and to let your winners ride, okay? And to exercise patience and strategy of where you're going to get into these trades. Because if you lose on a trade and you start, throwing money at another trade because you want to get that loss back, you're doing it wrong. Most times, 9 times out of 10, you're going to lose, and you're going to lose more because you're trying to do something to get back. You're revenge trading, and revenge trading will wipe you out faster than anything else. I mean, trust me, like I blew one of my accounts previously by revenge trading, by saying, oh, okay, I messed this trade up. I want to get back into this. I'm sure I can make it up on this. And then you make another bad decision. You misjudge the market in another way because you're not in the right psychological mind state to be trading. So really remember that. You don't want to get caught up in these emotions at all when the market's moving. And then when you lose, you want to basically, just walk away and reassess the market in a different mind state and never revenge trade. Because being impatient, first of all, trading with the rest of the herd into these emotions and not understanding what's going to happen next, that is the number one reason for loss. People just not understanding the flow of the market. Then misjudging their entries and chasing things. That's another reason for loss. And then when you make a bad trade, revenge trading to get it back will really start to wipe you out. So you really got to tune into the cycles that the market is making and be aware of how other people are going to lose money. As simple as that. And now let's use Ethereum here as a little bit of an example, because right here, this is basically setting itself up to see if it wants to hold this support right here. Okay, if this breaks this support, this whole thing was probably going to do a deeper move, a deeper retracement. So as we trade our Elliott wave theory, we want to trade the upside. Okay, we want to trade the upside in a bullish market. It's really to guess where this retracement is going to fall. This consolidative period in time. It's almost impossible. We don't know if we're going to get a flag out of this or a pennant, or if we already got a pretty nice retracement of the whole move here, about here in this area. So when we are watching things like this, we want to trade them on the impulsive side on the way up. Okay, when we see it consolidating up and it breaks out, we can kind of get a wave count on the smaller time frames and see how this thing is unfolding. This is where we want to trade it, this whole impulsive side. Once it gets exhausted and starts to sell down, we don't even want to start to guess where this thing is going to retrace to. The only way to really guess at that point is to say, okay, if this thing sells down to my normal, 61, 50% area, it's a buy. But it's a buy by keeping, an eye on your trade, or at least a stop at break even, because we still don't know if we're going to get an ABC retracement out of this. Okay. We still don't know if this whole thing is going to, do something like this, and then just kind of break down like this. All right. But if we get this point here on the initial sell-off, we get this retracement, we at least have a good chance that if this thing continues, we got a good spot on the retracement. Okay. Again, buying everyone else's loss here at this retracement point. Now, there's no guarantee that this thing is going to continue from this bounce all the way up into another wave, but at least we have a good seat. If it's going to continue, we're there. If it's not going to continue, we're still in profit. Okay, we could definitely watch this thing on its way up. And the way that I would play this is, if I bought this dip right here and I've seen it make a nice wave up here and hold and then start to go up, I would basically be sitting in a little bit of profit right now with a stop loss right. Not there. Sorry guys, my mouse or trading view or something's just not jiving here. Come on. I'll be sitting with a stop loss right about here in the market. Okay, so, and maybe even a little bit higher at this point. This is where I would have had my stop loss after I got into this trade. Okay, if I bought this dip, I would have a stop loss relatively below these lows as we start to climb higher. Now, if this thing breaks this line, I might keep the stop loss actually right here, because if it spikes down here, I don't want to get stopped out. If I get stopped out here, I'm still in pretty good profit. Just a little bit of profit, but it's better than a loss. So now I'd be watching this thing to see if it respects this line. So here, this could possibly be another entry right here if this respects this line, because